Why gold isn't skyrocketing yet, and why that shouldn't worry you. Let me ask you a simple question. With wars raging in Ukraine and the Middle East, with global debt spiraling out of control, with governments printing money like never before, why isn't gold skyrocketing? Why isn't it already at $5,000 or $10,000 an ounce? Today, I'll give you the answer most investors never hear. And I promise you this, once you understand what really drives gold, you'll stop checking the price every week and start sleeping better at night. Too many people treat gold like a crisis asset. They expect it to explode every time there's a war, a bank failure, or a new geopolitical scandal. But here's the truth. Gold doesn't react to headlines. It reacts to historic shifts in monetary policy, to the systemic destruction of paper currencies. If you're buying gold for a quick reaction to some bombing in the Middle East, you've misunderstood its role. Gold doesn't go up because of war. Gold goes up because your money goes down. Since 1971, when the US decoupled the dollar from gold, every major currency has been on a one-way street, downhill. The dollar has lost over 98% of its purchasing power. And guess what? Gold didn't rise in value. It simply held its ground while the world around it collapsed. That's why smart investors don't measure their gold in dollars. They measure it in ounces, grams, or even chickens and Big Macs. Because paper money is the illusion, gold is the benchmark. Let's take a step back. From 1971 to 1980, gold went from $35 to $850. Then came a 20-year correction. From 2001 to today, it's risen from $300 to nearly $3,000. Not because of panic, not because of politics, but because the monetary base expanded again and again. Every time central banks inject more liquidity into the system, every time governments spend money they don't have, gold quietly adjusts. Not overnight, but inevitably. So back to the question, why isn't gold already at $10,000? Because we are still in the calm before the storm. Yes, inflation is high. Yes, debts are unsustainable. Yes, central banks are cornered. But the public still believes in the system. The average investor still trusts central banks to fix it. Confidence hasn't collapsed yet, and that's the key. Gold surges not when things get bad, but when trust in paper money finally breaks. If you're waiting for a crisis to buy gold, you're already too late. Wealthy investors don't wait, they prepare. That's why for over 20 years, I've told my clients the same thing. Hold physical gold outside the banking system, not as a trade, not as a speculation, but as the foundation of your wealth. Don't try to time the market. Don't panic over every dip. And stop checking the price every day. Right now, governments are creating debt faster than at any point in human history. The US, Europe, Japan, they are all in the same game. Print, spend, repeat. At some point, confidence will break. Currencies will devalue even faster. And when that happens, gold won't just rise. It will reprice itself. We're not talking about a 20% move. We're talking about a monetary reset. If you understand this, you stop seeing gold as a price play and start seeing it for what it truly is. Insurance against systemic failure, the foundation of real, uninflatable wealth, a timeless currency in a world of vanishing money. So if you already hold gold, congratulations. Don't touch it. Don't sell it. If you don't, ask yourself, what will happen to your portfolio when your currency loses another 90%? Gold doesn't promise riches. It promises survival. And in times like these, that's the smartest bet you can make. If you want to know how wealthy families are securing their gold holdings outside the banking system and why some are moving up to 50% of their liquid assets into physical precious metals, get in touch. Because your assets deserve more than hope. They deserve a fortress,